About 1,400 years ago, a rich lady by the name of Khadija, may God be pleased with her, gave money to a young noble gentleman called Muhammad, peace be unto him, who was in his early 20s and reputed to be honest and trustworthy, to manage her funds in business and agreed to share the profits. This is the partnership transaction we know today as Mudaraba, where one party is the investor and the other the fund manager. Let us enlighten you as to how this model has been adopted today in the operations of savings and term investment accounts in an Islamic bank. Roshan recently sold a property and wanted to invest the sales proceeds of 5 million rupees to earn a return. Knowing the fact that God has permitted trading and forbidden interest, interest is where a lender receives any excess above the loaned amount. And having heard of an interest-free alternative for savings and investments in Islamic banks, Roshan approaches one to seek more knowledge and understanding on how such products work. The banking officer explains that the savings and term investment accounts at an Islamic bank operates under the basic principles of a partnership, where the contribution made by the customer to the partnership is the fund invested, and the contribution made by the bank is the effort in managing the fund, while agreeing on a ratio of sharing the profits. In Islamic banking terms, this partnership concept is known as Mudaraba. When Roshan deposits 5 million rupees into a term investment account, he becomes the investor, and the bank undertakes the role of the fund manager. Roshan would then accept the ratio on how the profits will be shared between him and the bank. The bank then deploys these funds effectively towards earning a healthy profit. Such profits are then shared amongst the bank's investors as per the agreed profit-sharing ratio, thereby rewarding the investors for the risk they have borne. For example, if the bank generates 500,000 rupees from Roshan's investment, Roshan's share of the profit is 400,000 rupees, and the bank will earn 100,000 rupees. The profit-sharing ratio will differ based on the period one agrees to invest. As the agreed investment period is longer, the customer's share of profit increases in order to reward them for the long-term risk they have undertaken. The bank may choose at its sole discretion to reward the customer with more than the agreed share of profits by foregoing part of the bank's portion of profit. However, the bank is completely prohibited from reducing the profit share pre-agreed with the customer within the investment period without establishing the consent of the customer. So how is this different from an interest-based savings account? An interest-paying account defies the concept of risk and reward and assumes that money on its own can generate more money, which is conceptually incorrect. In interest-based accounts, the interest amount is known in advance. It is similar to one putting 1,000 rupees in a drawer and expecting more money when they open the drawer 1 year later, where in reality it should be the same amount. How silly would it be to expect to see 1,100 rupees when you open the drawer in 1 year? You did not take any risk with your money. Therefore, there is no possibility of getting a reward beyond your original amount. However, a Mudaraba-based deposit is similar to you investing in a business, taking the risk to earn a reward. Like Roshan, there are many other customers as investors who are willing to deposit to the bank's investment pool. Money from this pool is used by the bank towards financing individuals and businesses based on different trading structures, which would generate profits to the pool. Further, while an interest-based savings account pays a fixed interest amount, it restricts the customer from earning more when the bank earns more. Whereas in an Islamic bank, when the bank's investment generates more returns, the customer's profit also increases, since it is based on a profit-sharing ratio. In the event of a loss, the impact will be initially absorbed by the profit portion of the investment pool, resulting in Roshan getting a lower profit amount. Therefore, the possibility of Roshan losing his original funds only occurs if all deployments made through the investment pool turns out to be loss-making, which of course is a very remote possibility. This type of partnership-based concept is applicable to all types of savings and term investments accounts at an Islamic bank. So now that you know how Mudaraba works, the next time someone asks you how a savings or investment account works in an Islamic bank, you are better equipped to explain it to them. Amana Bank. It's your bank.